So it seems like this month everything has changed in the stock market. The S&P 500 over the past month is up by over 4%, so is the FTSE 250. This is in direct response to the Federal Reserve in the United States saying they think that interest rates will be going down next year. As a result, the stock market has intense optimism for the future, and that has led to an influx of money back into the stock market, leading to higher valuations than we've seen in the past few months. However, in my InvestEngine account, which I'm going to show you now, I do not care about what the market is saying or where the stocks are heading. I invest £100 a month every single month to show how you as a beginner could put in a small amount but still see nice gains over the long term and hopefully get you all the habits to build a better financial future for you and your loved ones. If you would like to sign up to InvestEngine, which is my most recommended ETF platform out there, which has zero commission on ETFs and little to no fees on anything else that other providers will be charging for. If you sign up using the link in the description down below, when you complete registration and top up your account by a minimum of £100, you will receive a welcome bonus of up to £50. So don't miss out on that opportunity. Now, since my last update, there have been a number of changes. One is the elephant in the room, which is coming up on the screen right now, but I'm going to talk about that a bit later. So my total balance currently is £2,166.76. And most of that is due to the fact that I've seen a lot of capital appreciation over the past month, my portfolio being up by over £201.52. So the thing I like about InvestEngine is that you have the ability to create different cards for your different investments. For me, I do like compartmentalizing some of my investments from my others just to see how they are performing separately. So in this video, I'm going to go through all my different investments and how they have been performing. First of all, I have £0 in cash, as I do believe that in an investing platform, you shouldn't really be keeping your money as cash. Your money is better off in the market because time in the market is honestly better than timing the market 9 times out of 10. So the first card I have is the VUSA and the VJPN. So this is a mix between the Vanguard S&P 500, so the VUSA, and the Vanguard FTSE Japan, which is the VJPN. So initially this portfolio was an 80-20 ratio between the S&P 500 and the FTSE Japan. However, because InvestEngine lets you override this at any point, you can just change that, as I have changed, and the mix is more like 50-50 at this point in time. So you can see that the last time I invested in this portfolio was back in January of 2023, and since then I didn't want to invest in the S&P 500 by Vanguard or the FTSE Japan by Vanguard too. So if I press this button, you can see my net contributions, and that blue line and the shaded bit underneath represents the total amount that I've put in, and everything above that represents the capital gains and the dividends that I've received from these two ETFs. So if I go into dividends, you can see that I've received £3.26 from these two ETFs. You can see back in December, £1.06 from VJPN and VUSA, so 76p from VJPN and 30p from VUSA. You can also see again in June I was paid, and in total that's £3.26 from a portfolio size, as you can see, the balance of only £200-ish. I can also go individually into each of these ETFs, so for example the VUSA, and I can see the performance of the VUSA from the past year, 6 months, 1 month and 1 week. As you can see, the last time I invested into the VUSA of this portfolio was back in January 2023, and I bought it for around £61.89 per share. Now it has skyrocketed to £70.46 per share, which shows the power of regularly investing, or actually even if you don't regularly invest and you have bought in at a certain point in time, the market as a whole tends to always increase in value, meaning that your past endeavors and your past efforts usually do pay off with high quality ETFs such as the S&P 500 from Vanguard. You can also see the dividend yield at a glance. That is currently 1.24%, all based on the stock price of around £70 right now. You can see that I have 1.4 shares in the VUSA, so that's £98 worth currently in holding. That is up by 13%. So you can see over the past month up by around 2.6%, but overall I am up by 13%, which I'm really happy with. Same thing is when we go into the FTSE Japan here. You can see the last time that I invested in this actual ETF was back in November of 2022, so it's been over a year. But you can see since then I bought back in November 22 when no one was investing. I regularly put in my money, and you can see since then it has gone up by a huge amount. Over the past year, over 10%. You can see in my portfolio up by 9.35%, which is really good. And as you can see, when I was investing regularly, I bought them at very good prices, prices, and since then they have gone up consistently. You can see that at the point when I was buying regularly, I kept on buying worse and worse each time, meaning that the value of my portfolio back then was not going up. However, as we know, the stock market is in a much better situation now, and everything that you've bought in before, you're going to be really getting the benefit of that compound interest, of that added value, because you actually invested in a time where the stocks were valued a lot less. So next I have a portfolio named VUSA and VJER. You can see this is a mix between the FTSE 250 again and the Vanguard Germany All Cap by also Vanguard. The last time I invested in this was back in February 2023. You can see my net contributions. Everything in my InvestEngine account currently is actually in a positive, so you can see compared to my net contributions, it is doing a lot better. My investment return for this portfolio, which is the VUSA and VJER, is up by a huge 17.55%, which is absolutely amazing to see in such a bad market condition that we've had over the past few months. Investment return £15.66, but of course if I put in more money, I would be getting more as a percentage overall. If we look in terms of dividends, my highest paying month was June 2023, with the VJER paying £1.01 and the VUSA paying 16 pence. Overall in dividends, I've received £1.90 from this portfolio. Remember that you could always set up savings plans, so basically what happens is you can actually deposit from your bank on a regular interval, say weekly, bi-weekly or monthly, and that will just go into your portfolio, and whenever it has any spare cash as small as £1, it reinvests that money and you don't have to worry about reinvesting dividends, and your money will be constantly reinvested without you having to do anything. So the next portfolio card that I have with InvestEngine is called the GSPX, and in this portfolio I have 100% of just the S&P 500 by iShares. At that point in time I decided to switch over from the VUSA, which was by Vanguard, to the iShares, which does cost a little bit more, 20% more-ish as a total expense ratio. As you can see from the total expense ratio number here, that is 0.1% compared to the 0.08% from Vanguard. However, the difference between these two funds is that this is a currency hedged or pound hedged ETF. So basically what they want to do is to track the original S&P 500 more closely. Any fluctuations within the pound and the dollar, they are hedged. Essentially there's a buffer system, but this costs a bit more, but also means that you're getting more of the gains that the Americans are getting and less of the loss that you're getting because of the fluctuations between the pound and the dollar. That being said, the hedge isn't always going to work in your favor. If the currency exchange reverses, then of course there you would lose out some money. But in any case, I really wanted to invest in the GSPX quite regularly, and therefore what I did was to just make a portfolio just having the GSPX. You can see I've invested it quite regularly into this fund, but the last time I invested into it was a couple of months ago, back in September. Since then I've probably used another portfolio, but it doesn't really matter. Including my net contributions, you can see again since October everything has kind of skyrocketed, and overall in my portfolio you can see that I am up by a nice 4.63%. That is a return of £51, which I'm very happy with. In terms of dividend, I received £10.68, which I'm really happy about. In September I received £5.42 from the GSPX. It's worth noting that the GSPX does pay a small dividend yield. However, because of how much I have in it, it does seem quite substantial compared to my other portfolios. And also the GSPX does pay only twice a year. You are only expecting payments in March and September. If you regularly invest and have more within the GSPX, the trend usually would be that the amount of dividends that you get increases. So for example, if I keep continuing to invest in the GSPX, I can expect more than £5.42 the next time I'm paid in dividends, as hopefully the more shares I have, the higher the value in terms of the capital appreciation that I get, but also the dividends start compounding as well. You can see the performance of the S&P 500 by GSPX without going into my portfolio. You can see over the past month they're up by 21%, which is absolutely huge. No one at all expected the stock market to actually go up this high. A lot of investors, I feel like, did lose out by actually just taking out their money from the stock market. As I said before, time in the market usually proves to be always better than timing the market. People that took out their money, we know, when the valuations were pretty low, and then put them into something like a money market fund, which does kind of guarantee for the most part that your money is safe, or a bank account which completely guarantees your money is safe. 5% that you would be getting from a bank account or a money market fund is nothing comparable to the 21% that you would have got with something like the S&P 500 from iShares. And the cherry on top of that is that you would have also gained dividends to around 1.3%. So I don't think I would ever, for the long term, take out my money and not think that the stock market is the best place. Of course, for long term, we're talking about 10, years minimum realistically. 30 years is a better time horizon. My time horizon for investing is about 30 years. Of course, I would want a considerable amount in my portfolio size before that, but it doesn't really matter because when it comes to drawing the funds, I have to risk manage later on and choose maybe to convert my money into something like a money market fund if the interest rates are high, a bank account if the interest rates are high too, or government bonds or something like that. Another thing to note is that I have 69 pence in cash. Once it hits that £1 threshold, it will be reinvested automatically because I have auto invest on. I really like auto invest. However, savings plans I don't tend to do as I like to manually put my money in as a deposit. So next I have a portfolio named DAX. So this again is a single ETF within the Vanguard Germany All Cap. You can see I've only really invested twice here, once back in February and then again once in November. So you can organize it just how you want it to. If you want a singular ETF in a single portfolio card, you can do that. For example, this time I decided to do that for whatever reason. So my investment return over this horizon has been a positive 1.66%. The Germany All Cap within the past 6 months up by 3%, past month up by a big 4.2%, and also up in the past week. In terms of dividends, I've only received £1.47, but again, my portfolio balance is very small, so I didn't really expect humongous amounts of dividends anyway. Lastly, I have the FTSE 250. Again, this is a singular ETF within a portfolio card. You can do that if you want to. You can see that my overall return here is 5.32%, which I'm really happy about. That is a positive return of £21.29. You can see compared to my net contributions, I've only very recently, as you can see over the past month, actually gone over my net contributions as the FTSE 250 actually rallied as a result of the news that has been coming out recently. In terms of dividends over the max period, I've received £4.72, which I'm really happy about. This was back in September. Again, at the end of December, I am expecting a bit more in dividends. The FTSE 250 by Vanguard does pay out dividends every quarter, so every 3 months. So it can be a very good option for dividend investors, but also I do really think for growth investors too. As you can see, the current dividend yield based on InvestEngine's calculation is 3.34%, which is actually really, really high. Personally, if I had any money and I didn't want to use it anytime soon, so within less than 10 years, I would always invest in the stock market. For example, something like the FTSE 250. Over the past month, it's returned 4.2% on top of the dividend yield it actually pays. So that just goes to show the power of stock market investing for the long term. Over the short term, things are super volatile. For example, if I decided between a bank account or the stock market for, let's say, £10,000 for my house deposit that I needed in the next year, and I put it in the stock market at the beginning of July, I would, if I put it into the FTSE 250, have been down a huge amount within the next few months, and you know what, I would have regretted it. However, because my time horizon is much higher than that, I've been buying regularly into the FTSE 250, and each time the price goes down, and mentally I'm thinking, this is not a good idea, it's just going down. However, things can change literally at the last second. You can see since October, it's gone up higher than it was back in July, so then again, I would have made my money. If I invested regularly, the prices that I would have bought them at, because I bought them at a lower price, when it goes up, that interest adds up on top of that amount. And you know, over the long term, compound interest will really help you out. So what I said was I would glance back to what I have here. So as you can see, it does seem like I have an ISA with InvestEngine. You can see that my remaining balance is £20,000. However, this isn't my current year's ISA, so I'm not actually technically allowed to actually put in even a single pence into this portfolio. However, you may also have realized that there is another card saying DIY self-manage and the words ISA transfer in progress. So I have decided to actually switch my free trade ISA from the tax years beginning 2021 and 2022 over to InvestEngine. So that's around £55,000 worth of cash into this account right here, and I will let you know what I choose to invest all that cash into. And of course, any subsequent updates, they will be included in these kind of videos. So I've decided to go from free trade to InvestEngine because InvestEngine actually does provide a free ISA, where free trade you have to pay £5.99 minimum for an ISA. Furthermore, with InvestEngine, it's just not really designed to time the market like I used to do in free trade. So that's going to give me some peace of mind that I can no longer easily try to time the market. All my money will be there and it will compound slowly over time, just like how I preach in this channel and how I do recommend for 99.9% of you out there for long-term investing to just regularly invest and not look at where the market is heading. So I'm very excited to actually see the ISA being transferred. It will take around maybe 4 to 5 weeks from now. I know there was a delay in the transferring process as there were a few limit sales that actually executed later on after actually me pressing the transfer button. So that will settle, give it a few days, and then I expect at the end of January or beginning of February for these funds to actually come into my InvestEngine portfolio. So make sure to check out some of my other videos, and I will see you in the next video.